It's time now for our Futures in Focus segment. Oil collapsing 8% this week, racing almost all of the gains since OPEC agreed on output cuts back in November. Earlier today on Bloomberg, Citigroup's head of commodities research, Ed Morris, explained oil's dramatic drop.
It's all technicals. There's nothing fundamental. Nothing has changed in the market. It's expectations in part. It's technicals in part. And then all of a sudden the market got bearish. We had a record amount of trading for a couple of minutes, a record amount of open interest, and it was all shorts coming into the market.
Well, joining us from the CME to discuss now is Tim Evans, the Chief Market Strategist at Longleaf Trading Group. All technicals, Tim?
Oil technicals definitely are playing a role here, but I do disagree with those comments. The oil fundamentals are playing a role as well.
In what sense? The idea that OPEC may not renew or may have to make further production cuts?
Well, I mean, I think it's really simple mathematics. I think if you look at a lot of the projections that were made in terms of the market being able to find balance over time, I think some of those projections are proven to be wrong. I mean, if you look at growth projections or demand projections, that was assuming, we would continue to see, strong demand out of the U.S., but especially continued strong demand out of China. Obviously, Chinese numbers have slowed a bit here of late. We saw GDP number in the U.S. Q1 significantly below market expectations. So I think those demand numbers aren't what everyone was hoping to see in order to bring this market to balance.
But why
the U.S.
did the lack of faith just completely, crater this market this week in particular? We haven't seen similar moves in other asset classes.
Yeah, no, I think that aspect is definitely due to technicals. If you look at the commitment of traders report, even as of the last one reported, April 25th, there was still a very sizable long position in the market, and that spec long position has been very stubborn, even as we have, worked off the highs there in the mid-50s. So a lot of speculation done in energy markets are done on a margin basis. So,
yes.
I think what we really are seeing is capital liquidation on these margin positions.
Well, so now that we've stabilized back just above $45 a barrel or so, do some other players come back into the market now?
I think so. I mean, I think what we saw last night as we, got below $44 a barrel, we took out the August lows. There was a surge of volume below those price levels, so I think a lot of stop-loss orders were hit, and the market effectively cleansed itself very quickly. We've had a nice, robust turn off that overnight into today's session. My view is, these technical levels should hold, and we'll begin to filter new fundamental information to find the new direction forward from
Tim,
here.
what's the action in the rates pits this morning, given the better than forecast jobs number?
In terms of crude oil, I don't think that's going to have a whole lot to do with crude. Oh, with rates, yeah. With rates, I think next month, barring any, unforeseen change in the trends that we've seen, I'm expecting a rate hike next month.
Yeah. So what's going on in interest rate and Fed funds futures markets this morning at the CME?
I mean, we're up slightly, and I think we're seeing that across the board. As the markets were working, lower pretty much across the board. I think it was a lot of index trading yesterday. So I think we're seeing some soft recoveries in the market today, and rates are part of that mix.
All right, Tim Evans, Chief Market Strategist at Longleaf Trading Group, with today's Futures in Focus.